Gold is at a new, fresh, all-time high right now. It's trading above $4,925, up better than $94 so far today. Silver also right on the highs, up $3.18. We're at $96.16. Look, it's not going to be much longer where you could buy silver below $100. So, don't wait. And gold, it won't be below $5,000 for long. So you got to go to Schiff Gold. You got to buy yourself some gold and silver. And again, on the silver, buy it before we run out. I can see the shortages are coming for silver. There's just not going to be the product. There's just too big a demand. The demand for physical precious metals has been very muted over the last few years because people didn't realize what was going on.
Precious metals are storming into historic territory, with gold shattering all-time highs above $4,925 and silver surging past $96. The window for accumulation is shutting fast. Analysts warn that the opportunity to acquire silver below $100 and gold below $5,000 will soon disappear forever. PeterSchiff, chief economist at Euro-Pacific Capital, emphasizes that the market is unprepared for the looming physical shortage, a direct result of global demand suddenly awakening from years of being muted. Schiff argues that as the public realizes the actual state of the economy, the rush for tangible assets will drain available supply. This creates a critical bottleneck in which product won't be available to late buyers, transforming the market from a price speculation game into a desperate race for possession before the shelves are empty. Consequently, the chance to buy silver below $100 and gold below $5,000 is effectively gone. Schiff urges investors to shift gold now, predicting that once these psychological levels are breached, they will never be seen again. Acting immediately is the only way to secure metal before the inevitable run depletes all remaining inventory. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Rates are too low. Donald Trump wants them to be lower. The Fed is talking about cutting them, but the markets are screaming that they need to be raised. And that's another reason that gold and silver prices are soaring, because the precious metals markets are letting everybody know that interest rates are too low. They need to be much higher, but they're not going to go higher. They're not going to get raised at all for a number of reasons. And so this bull is just getting started. And I know there are people that are saying, well, maybe isn't it like 2011, when gold peaked out at 1900 and silver was like 45, 46? No, because 2011 was following a 10-year period where silver went up 10x. Silver went from under $5 to almost $50. Gold went from under $300 to $1,900. We went sideways for 12 years. Gold just broke out last year. 2024 was the first year of this move for gold. 2025 was the first year for silver. We are early in the breakout. We have years and years ahead of this move and multiple of the current move. And really, the mining stocks are just in the process of breaking out. Their breakout year is 2026, even though they had a great year in 2025, even though they tripled, the silver stocks tripled, or the mining stocks at least more than doubled. But even though they did that, their earnings went up much more than the stock price. So they ended the year cheaper than they began. So I think this is the year that they're going to finally really accelerate. And so we're early. Gold is at a new, fresh, all-time high right now. It's trading above $4,925, up better than $94 so far today. Silver also right on the highs, up $3.18. We're at $96.16. Look, it's not going to be much longer where you could buy silver below $100. So, don't wait. And gold, it won't be below $5,000 for long. So you got to go to Schiff Gold. You got to buy yourself some gold and silver. And again, on the silver, buy it before we run out. I can see the shortages are coming for silver. There's just not going to be the product. There's just too big a demand. The demand for physical precious metals has been very muted over the last few years because people didn't realize what was going on. And in fact, a lot of people that might have bought gold or silver ended up buying Bitcoin. And I feel really bad for these Bitcoiners. Bitcoin is down again. Bitcoin is 89,500. It's not going anywhere. It's relatively flat on the year. Last year was my best year ever as an investor for my entire portfolio, right? And it was the best year that I had as a professional money manager for the entire portfolio, right? We killed it. We hit the ball out of the park, right? It was in a phenomenal year in 2025, and Bitcoin went down last year. This year is already off to a much better start. The returns that we're getting in January alone are incredible, and January isn't even over. And the people who are sitting in Bitcoin, not only did they miss out on all the gains from 2025, they're missing out on all these gains from 2026. And as big as the gains were last year, I actually think they're going to be bigger this year, as amazing as that is, because people think, how the hell could you beat last year? Because last year was so strong. Well, I think we're going to beat it. And of course, as far as the amount of money that customers will make who have these strategies, we're starting from a much bigger base. So even if the return percentage-wise isn't as big as last year, the dollar value of the gain will be bigger because we're starting from a bigger number. But I actually think the percentage gains could be bigger too. This is an explosive year, I think, and Bitcoin is just going sideways. And even though it hasn't crashed yet, and I'm surprised that the bottom hasn't dropped out yet, but it will. But if you're sitting there in Bitcoin and you feel good because it hasn't crashed, the losses that you are experiencing right now is the opportunity cost. While you're sitting in your Bitcoin hoping that Bitcoin goes up, you're missing what actually is going up. You don't own any gold, you don't own any silver, and you don't own any mining stocks. The world is going to move away from the dollar, and a big part of that, right, is buying gold, replacing U.S. dollar reserves with gold. And once gold is the reserve, nobody needs dollars. You don't need dollars to buy our products because, we have huge trade deficits. And the world is going to take America down several pegs because we just threw it in their face. Donald Trump just gave the world several reasons to do what it should have done a long time ago.
The financial markets are currently flashing a massive warning signal as the Federal Reserve discusses rate cuts while the bond market screams for hikes. This disconnect is a primary driver behind the explosive rally in precious metals, which are effectively pricing in the reality that interest rates are far too low for the current inflationary environment. Unlike the 2011 peak, which followed a decade-long bull run, today's move is just beginning. Gold only broke out in 2024, and silver is barely into its first year of proper acceleration. Market analysts argue that the real tragedy of this cycle falls on Bitcoin investors, who are suffering immense opportunity costs while waiting for a rebound. While crypto remains stagnant around $89,500, mining stocks have doubled yet remain undervalued relative to their surging earnings. This divergence highlights a global shift away from the dollar, accelerated by geopolitical tensions, as central banks aggressively replace greenbacks with gold reserves. The bull market in tangible assets is still in its early stages, leaving digital alternatives behind as the world returns to sound money. Let's get back to the interview.
The difference between the 2008 financial crisis and the 2026 financial crisis, other than the fact that this one's going to be bigger, is going to be this is an American crisis. It's not a global financial crisis. It's global relief. It's a burden being lifted from the backs of the global economy, where the world gets to enjoy, eat the fruits of its own labor, right? and invest its own capital. It doesn't have to subsidize American consumption anymore, right? We are not what makes the global economy work. The global economy is what makes America work, right? We could not survive without the world. Without the world, what do we consume, right? They've got the factories, they've got the infrastructure, they've got the supply chains. They produce all the stuff we consume, right? If you take the world out, what do we got? A bunch of empty shelves, a bunch of strip malls stripped down to nothing, right? And a bunch of printed money. What does the world have without America? All their stuff, everything they produce. It's still there. So what? They're just going to have an excess supply of stuff. Well, that's a good position to be in. If the world has a glut of stuff, what does that mean? That the prices come down. Everybody gets to buy more. That's a good thing. America, we have a shortage of stuff. We have a bunch of people who want stuff and nothing for them to buy. That's a bad situation, right? The rest of the world has more stuff than they've ever had. And so now they can buy a lot more stuff, because the exchange rate changes, and that brings down the prices. And this is so simple. It's amazing that people haven't figured it out. And, you know, I titled my last podcast, The Real Crash is Here. And it's not here in the sense that this is the crash. It's a process and it started, right? So the real crash is going on right now. The GDX up 3.83%, so a little bit under 4%. The GDXJ up about 5.5%. So the high was up about 6%. So we didn't make new highs into the close. I guess there's still some profit taking there, but these are new highs, new multi-year highs for these indexes. I mean, either it's a new record high. As far as the GDX, this is the highest it's ever been. So this is a record high for that index. But if you look at the GDXJ, it's still below its 2011 high by about 20%. So, you know, gold is triple what it was back then, right? We're 1,900, not quite triple, but more than double, right? Because it's almost 5,000, and back then it was below 2,000. But those stocks are lower than they were back then. Now, that's not going to be for long. I think, you know, certainly by February, in my mind, if not even before the end of January, we'll take out those highs. But then we're going much, much higher because this is a whole new world that we're about to experience, right? We are going back to a world where the U.S. dollar is not the center of the universe here. It's not going to be that everything revolves around us the way Trump believes it is, right? I mean, it's been like that in a sense that, yes, we have been able to consume, luckily, what everybody produced. We have been able to borrow what everybody saves. And so to that degree, we have been an important part of the way the global economy works. But the global economy would have been better off with a different system where they got to consume what they produce. They got to invest what they save, not Americans. So this is liberation for the rest of the world. And this is a day of reckoning for the United States. So, you know, remember, get your gold and silver now while you can at Schiff Gold. Contact the representatives at Euro Pacific Asset Management and get an account set up. I mean, this is going to be the best January I think we've ever had. But I think 2026 is going to be the best year we've ever had, following the last best year that we've ever had, which was last year. And this is not the end of a trend. This is the beginning. The U.S. was outperforming the global markets from 2011 to 2024. That was a long run that America had. That streak is over, right? And a lot of people are still investing in the rearview mirror. They don't get it. You got to understand what's changed and how that is going to impact your investment returns. So get on the phone with the representatives at Euro Pacific Asset Management. If you already have an account, great, add to it, transfer some more money in. If you don't have an account, what the hell you been waiting for? Get set up. Don't miss any more of this move than you have to, right? Because I think that, you know, this is one train that you can't afford to miss. You got to get on this thing because you got to get out of the dollar. Because if you don't do this right, you don't have a second chance. Once the dollar's purchasing power is gone, it's gone. Right? And if all you got is dollars, then you're left with nothing. That's everything for today. I'm probably going to do a Schiff Gold market wrap on Friday, so make sure and look out for that because we could have another huge day in the metals tomorrow. And again, another big weekend with a big gap up on Monday.
The unfolding financial crisis of 2026 differs fundamentally from 2008. It is not a global collapse, but a specific day of reckoning for the United States. Experts argue that this event represents a form of global relief, where the rest of the world stops subsidizing American consumption and begins to invest its own capital domestically. As this decoupling accelerates, foreign nations will enjoy a surplus of goods and falling prices, while the U.S. faces the opposite: empty shelves, product scarcity, and hyperinflation fueled by printed money with nowhere to go. Market signals confirm this historic shift, with the GDX mining index hitting fresh all-time highs. However, an immense opportunity remains in the junior sector, GDXJ, which still trails its 2011 peak by 20%, despite gold trading nearly 3 times its price then. This discrepancy suggests the bull market is only just beginning. Investors are warned that the real crash is a process of permanent destruction of purchasing power. Once the dollar collapses, there will be no second chance to exit paper assets for real wealth. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.